I think the biggest mistake we can do now is be too late.
Why is it different now?
The world is looking at us and thinking, we're going to do it this time. This cannot be an incremental improvement. We need a step change.
I still find it quite a demanding challenge. It's a great pleasure for me to welcome you to today's ESM Lunch Talk. I have a great guest with me, Maria Luís Albuquerque. She is Commissioner for Financial Services and the Savings and Investment Union. I know Maria Luís for a long time because before she was in Portugal head of the Debt Management Office and later on Vice Minister of Finance and Minister of Finance when the ESM was engaged with Portugal as one of the countries that benefited from our support. I will talk to her about her views on the Capital Market Union, on the Savings and Investment Union, and how we are progressing in this crucial project for Europe to make financing work for growth. We need more investment, we need to bring people and households to capital markets, and she's in charge of that portfolio. So it will be a big pleasure to hear from her where we stand in that project. Hello. Welcome, Maria Luís. It's great to have you here for this ESM Lunch Talk. Now you are 1.5 years into your office as Commissioner,
Yes.
Commissioner for Financial Services and the Savings and Investment Union. Do you remember where you were and what you thought when you heard that Portugal would officially nominate you as Commissioner?
Hi, Rolf, and thanks for having me here. The conversation was kind of ongoing for a while. I remember I was at Frankfurt Airport when the Prime Minister of Portugal called me and said, I'm going to announce publicly tomorrow that she will be the candidate. So yes, I was at Frankfurt Airport around, 5, 6 p.m., something like that.
You had an idea about the portfolio, or that was one of the first reflections? What would it be?
No, I had hopes that the portfolio would be somewhere around this area because that's what I know about, what I like doing the most. But you know that this is part of the rules. There is a lot of balances to be made, lots of things to be considered. So one can only hope to get the portfolio we prefer, and then we accept what comes and do our best.
There is the nice part about the portfolio is also that, well, you get the broad assignment and you have a mission letter, but also you can very much determine what is the substance then eventually in detail of that portfolio. But there is an interesting point that I also wanted to raise. You know that you are part of the ESM history book. So here is a picture of you, and that picture was taken in 2013 when you were actually just nominated as a minister. You look happy. So, and on the picture.
Yeah, well, that must have been a mistake.
It was a difficult time, I think.
It was.
My question is a bit, you said your experience. When I know many people were actually very happy to have you nominated and also see you on that portfolio because you are a financial expert. But at the same time, you were Minister of Finance of Portugal in a very difficult time. So my question is a bit in shaping up what you do. What is it that you think drives you more or most, or what do you take with you? Is it your experience as a minister, the political side, or is it your expertise?
Well, I like to think both, actually. I think the fact that I have this experience both on public and private sector as a politician and as an expert helps, because I always try to put myself on other people's shoes and try to see the problem from their angle and try to understand their challenges. So it helps to have that experience. Having been a minister at that particularly difficult circumstance helps me to be even more driven to build the Savings and Investments Union, because we started integrating our markets. We started with the banking market back then, still to be finished, by the way. I'll give it another go. And I remember very well why we decided it was important to do it. Why was that needed for Europe? And I was still a minister when the project of the Capital Markets Union came to the conversation for the first time. So this also, what I'm trying to do now also resonates a lot to what we already tried to start doing back then. And the need is still here, and I would say more acute than ever. So that helps. And then understanding or having the expertise helps me go more into the detail of the technical discussions, underlying substance of the problems.
No, I think this taking people along, for me is a bit also of the, if you wish, the game changer in the savings and investment union as compared to a more abstract capital market union or banking union, because it is about this, making sure that you have the households on board and you have the firms on board and everyone can kind of chip in on this, because that is eventually what we need. When you developed your idea, how do you concretely have that project? What are the key features? So what was the key point for you, the spark, the idea that came to your mind when you kind of tried to shape that agenda?
Well, it was also the result of many hours of conversations with my team and with the services, with very smart people who've been working around this also for a number of years, as myself, because I was never really too far from these discussions. And the way I saw the Savings and Investments Union from the very beginning is that kind of a holistic approach to the financial sector. Because if you focus separately on banks or on capital markets, you will not be able to deliver the real change we need. We need the single market in finance. And the single market in finance encompasses capital markets, so the capital market union pillar, the banking union or the banking sector competitiveness, which goes beyond the banking union. So it's another pillar, but also the citizens, because it's about the citizens who save, the retail investors. It's about the pension funds, which is both a financial perspective, but also a social perspective and something very relevant to guarantee the future of the next generations. All that combined requires an efficient system and contributes to an efficient system.
That is true. And we also know there is the question on, why hasn't it moved before more? Right? You said when you were a minister already, this was when the idea was there. And you get so many times the question, why is it different now? Right? Which I thought maybe in your mind, there was a point where you said, when you got into that project, which is a super broad project, and where you said, okay, that's the spark, that's the idea. That is, I think, what indeed, beyond the outside need that we see in these days, that is what I think is the winning success factor.
The different element this time, I'd say it's the political momentum, is that we finally, everyone is talking about the Savings and Investments Union, even if many think it's just a rebranding of the Capital Markets Union, which is not. But anyway, the notion that we need to advance further on integrating our markets followed its course, and it's now accepted as a concept, which means that some taboos from the past, things we couldn't even talk about, are now being actively discussed. We are far from getting to where we need to get, but I think we have made very significant steps forward. And we have the possibility of have a proper conversation and put proposals on the table and having them discussed as we have seen so far. So it's about pushing this forward. And I think it's understanding that the world around us is more and more challenging, and that perception of a threat coming from the outside has, as always in the past, brought us closer together. And that helps overcome some of the resistances.
So when we look now, you have been pushing pretty hard from the start to also accelerate the agenda, right? So from your perspective, so on the capital market side, the package is pretty complete. The picture, we have advanced very much with, you have the integration elements. Before already you put forward securitization.
The pensions package, which is also very important. The financial literacy, also there.
And there we are. The next step to come is
banks.
People are waiting for your report on the competitiveness of the banking sector, and that should complete the banking side, right? The overall agenda.
Yeah, in terms of addressing the three pillars, yes, because it's capital markets, the citizens through savings and investments accounts, financial literacy, the pension system. We have also addressed that, and now the banks. but there's more to come. So we also need to look at the digital developments. We are reviewing the market in crypto assets regulation. We have conducted a public consultation, and it will be coming sometime in the first half of next year with a review of the UVECA regulation, so venture capital funds. It is a lot because there's a lot happening, and a lot of our framework is not exactly helpful to the developments we need as we would like it to be.
Let us, I mean, maybe we can park that for a moment because digital, it's super important, of course, at this stage. But I wonder also to which extent we can actually align the different agendas or to which extent there is a twist. But before, I mean, you said about the momentum, and we know now that the big European countries, the E6, have banded together to actually kind of lend their support behind your agenda. But they do it obviously in their way.
Not surprisingly, I'd say.
Not surprisingly. No, but I mean, we have also seen situations. So, I mean, it confirms what you say. There's political momentum because it's important. At the same time, obviously, it's also important to have everyone on board. I mean, if you look at what you proposed, if you look what the big countries are now put on the table, where do you see us standing, say, on this issue of market integration that is so central to the overall agenda in terms of creating common platforms, in terms of moving towards a more harmonized, more centralized supervision? Is this really good progress?
We've had several discussions at the ECOFIN. So beyond the E6 joint position, which was contributing to the debate and putting some timing pressure or accelerating the pace of the debate, we've had several discussions on the ECOFIN. And I think that the main principles have been accepted. So yes, we will move to EU level supervision for significant market entities. We will have review of the ESMA governance structure with an executive board along with the board of supervisors. These two elements are incredibly significant because this signals a change in mindset. Now we are discussing the details where the devil always is. So now the way we discuss on how to do it can make it successful or can make it very impactful or less impactful. And that is where the discussion is. And there you still see the national perspectives appearing.
I hope you don't mind that I push you a little bit on that point because, I mean, we have seen that often also in the past that ideas were taken up, ideas also proposed by the European Commission, and then eventually they are kind of practically negotiated, put into place that at some stage the logic got kind of too much diluted. Is there any point that you would say the integration idea in the centralization or harmonization of supervision and centralization that you would say, look, this is a key point that we need to achieve, and if we go beyond that in terms of dilution, if I may say, then it becomes counterproductive?
Well, counterproductive, I probably wouldn't say, but next to irrelevant maybe. Because the point here, what I think really we need in Europe and on the capital market side is credibility. I mean, we've been talking about this for more than 10 years, and we have not delivered anything meaningful. That is why people ask us, why is it going to work this time? Because we've been trying before. So the point here is get to that level of political commitment and political compromise that materially changes things. This cannot be an incremental improvement, something that we will continue to build. We need a step change. Yeah. And that step change will be now on how we define exactly which entities will fall under European supervision, how effective will this European governance be? Because we will have an executive board. The distribution of powers between the executive board and the board of supervisors is going to say a lot about our willingness to think more European and less national. That can be the game changer because the world is looking at us and thinking, if we are going to do it this time, there's no such thing as a European capital market, and we need it.
No, that's true. I mean, we have a lot of exposure to investors, obviously, because we need to also go out and sell our bonds. And we are globally investing, and that is a lot what we hear. With a view to what you say, I mean, it also reminds me one of the important initiatives is the 28th regime, which again is an umbrella, it's a framework, and then compared to the past, we must make sure really it means kind of there is common implementation and a harmonized implementation of it, and not kind of then it's kind of again going down to
we cannot
each.
have 27, 28 regimes
That's
because
it.
that is
That is exactly the
completely
point.
contrary to the purpose, obviously.
You mentioned the banking report, the report on bank competitiveness. Do you want to foreshadow a bit what kind of the key point will be that you will push? And I also ask a little bit on in our own interest, because you know that the ESM has a bit of a stake there. We are still meant to be the common backstop of the Single Resolution Fund, and I think it's indeed one of the low-hanging fruits that we should go for. So what is the direction of travel that you will be indicating?
The main point at the banking report is that this is not a quick fix. It's not a simplification exercise. It will simplify, but that's not what we are doing. What we are doing is we have had multiple engagements with all stakeholders. Myself, my team, cabinet services for a very long time. We had a very extensive and detailed consultation of 96 questions, if I'm not mistaken. We got 227 replies, so thousands of pages of detailed feedback, data, information on how the different stakeholders, and I'm talking about national supervisors, some governments, banks, associations, civil society, all types of stakeholders contributed to this consultation, giving their perspective on what is working well and what isn't. So we have an evidence-based analysis of what does it look like and where the problems lie. So what we are looking is at the framework, the regulatory and supervisory framework of the banks in Europe, and thinking what needs to be changed so that we take also here that step change and get to a more competitive banking sector. And the more competitive banking sector is one which is capable of providing the best services, both within Europe and in competition in the global space. So it's about corporate and investment banking, it's about retail banking, it's about providing services at local level and at global level, supporting the capital markets element, because one doesn't go without the other. It's a forward-looking positive agenda. Where do we need to see our banking sector in 5-10 years? And prepare the framework for that.
For me, that is one of the key points why I also like this idea of the Savings and Investment Union, because it brings the two angles together. And I cannot imagine capital market union or bringing people and companies closer to the capital market without the banks having some involvement, engagement in that on financial literacy and so many fronts, right, in providing the platform. So that it goes together.
You need banks. If you want to have an IPO, you will have a bank supporting you. You may want to underwrite a transaction you do in capital markets, an M&A transaction that might need to be underwritten. So you will need the banks often to also bridge between the client and the participation in capital markets. Investment banking, which is something we have left, I think, a bit unattended in Europe, also for regulatory reasons which disincentivize that activity. At the same time, for banks to be even more resilient, if we have a better distribution of risk across the economy, namely through capital markets, they will have a lower risk profile of their clients. And we also need to address one of the root causes of the lag in productivity in Europe, which is the fact that our companies depend too much on debt and too little on equity. So this all comes together to deliver.
Because that is why it says that securitization is so important. It allows to hand on risk, and we have alternative instruments.
It's very important, as long as it's not the banks selling securitization packages to each other.
That's true.
We need to see that being distributed across the financial sector,
Exactly.
in capital markets, by insurance companies. If it's just among them, won't really
But
work in the same way.
let me come back to the point that you raised before on digital finance, because at the same time we want the banks to be more competitive, more modern, but they also feel in a way threatened to some extent, or kind of challenged at least, by the evolving digital finance environment, because the question is raised, what will be your role? We have the emergence of stablecoins, we have instead also the opportunity of tokenized deposits. For me, it raises somewhat the question also for development of your agenda. To which extent is this going hand in hand? And you mentioned that you will be working as part of your project on digital finance. There may be an update of MiCA, and we will look into other regulatory elements. While you're developing the institutional infrastructure, is this a process that goes in parallel?
Oh, yeah,
To
absolutely.
which extent is there the risk that eventually the digital finance development will kind of front run, or will kind of make elements that we now are creating obsolete, because we move to a completely different avenue? We have everything distributed on a large part of business distributed on distributed ledger technology. So what is the interaction that you see?
That is actually part of the market integration supervision package, is an update on the DLT pilot regime. And part of the package which touches upon 18 pieces of legislation, if I'm not mistaken, it's also about changing our legislation to make it technology neutral. So we do not want to create a framework for digital finance. We want to make our regulatory framework fit to deal with digital or traditional finance. So to be more agnostic, if I can put it like that. And for example, tokenized deposits. Tokenized deposits are a different form of deposits. It's bringing a new technology, but we are still talking about deposits, and we are still talking about deposit-taking financial institutions. So that doesn't change materially. What changes, and I think that was in the beginning of your question, was the newcomers, the new players, the fully digital, no legacy, no significant costs. And yes, banks are being challenged, but that's what we call evolution, right? I think at the speed we are seeing, it could be more of a revolution than an evolution.
That's the point, or a disruption, is it?
Yes, but I think well, first, it's not something that depends on what we decide or not decide to do. It's happening. That's the first thing I think we all need to acknowledge, is that change is taking place. So the only thing we can do about it is decide whether we want to benefit from it, position ourselves to also benefit from this evolution, or if eventually we prefer to try and be sheltered and, in my view, not succeed, because this is happening. And yes, the incumbents on the financial sector, as in many other parts of our economy, are being challenged by a very, very fast evolution, different ways of providing services, of interacting with clients. But once again, this is happening. And the fact that it occurs in the digital space means that clients will have access anyway, because we all have phones that allow us through the internet to access to anything in the world. So I think it is in our best interest to embrace that challenge and to see how can we also benefit from the opportunities it brings, because there are some threats, but there are plenty of opportunities.
No, I agree with that. And I think I cannot imagine a scenario where we say we are sheltered.
No, that doesn't exist.
It does not exist, right? So if we are sheltered, we miss the train. It's not other, and you don't participate, and then the rest evolves around it, and we will be dependent, as we are in other services,
Not just
on what is
dependent,
provided
you will be
from the
condemned
outside.
to fail, because the success of a business depends on keeping their clients. And you cannot force the clients to continue with the same services providers. I mean, theoretically you could, but I'm sure we wouldn't, because we shouldn't. So you need to find a way to adjust your business model to this evolution.
I must say, I still find quite a demanding challenge.
Oh, it is.
Quite a demanding challenge for you, because I mean, making these tracks flow in parallel, or make them flow without having a disruption, is quite an issue, and quite demanding. We don't know at this stage how precisely it will look.
No, I do think that the main challenge is actually the time we take to make decisions. Because I think that, and I hear this often, that if you move too fast without taking the time to make proper assessments, you risk making big mistakes. I think the biggest mistake we can do now is be too late. So I'd rather make some mistakes and move forward and then correct as we go along than saying I'm waiting for the perfect solution. It's like getting to the perfect diagnosis, but the patient has died. So there's not much point in that.
Well, that is not where we will be ending up, and you
Hope
do
so.
all you can.
I intend to be very much
we want.
alive anyway.
I think we're coming a bit closer to the end. But so let me ask you, if you think forward, I mean, you're not even half through your mandate, so right, so there's still plenty of time to go. But if you think forward and what we just discussed, and you imagine yourself then at the end looking back, what is it that you would say, this is what I would like to have achieved? This is kind of the key thing that I really hope I have brought home.
Oh, I would love to have just the question being asked, now you have achieved the Capital Markets Union, where do you think we should go next?
Wow.
In the sense, well, not the Capital Markets Union as a finished project, because that is something that takes long, but in the sense of having been able to bring everyone together into making this step change, into having a significant higher level of integration, of having dynamic local markets interconnected so that we can benefit all from a common liquidity pool, a 28th regime approved functioning, and probably aggregating further elements to allow this European layer that makes it easy to go cross-border, people having less money in bank deposits and taking more risk into capital markets. If we see all that happening because the framework is in place and is working, and we see that moving, say, it's not like we would be fully unified, but if we had created the right framework and things are already evolving in the right direction, the question would be what comes next now that the Capital Markets Union is in place. I'd love to hear that. That's probably too optimistic, but I will continue to try.
At least we as M will do our best to help you in that and with all what we can as an institution and as a financial market participant. And best of luck.
Thank you. The banking union as well, by the way. Thank you
Very
very
good.
much.
Thank you, Maria Luís.